But I do think that there is some correlation here that you've identified that makes sense in the ammo market, because one of the things you talk about is especially a barrier of entry into this kind of market, because obviously the traditional response to prices increasing in a particular market, in the ammo market in this case, and I think for one, it's undeniable that prices have increased. Prices are sky high right now for ammunition. I think anyone who buys ammunition realizes.
And there are shortages too. So even if you sometimes you can't even find it, from what I understand.
Right. Yeah. There's been a 2-year long shortage at this point of ammunition, almost 2 years. I mean, coming up in March here is when the surge began. But or maybe some manufacturers have said that it actually went back further than that because of some of the other factors that drive sales had kicked in even before the pandemic began. But regardless, it's undeniable that prices have gone up, and in some cases, almost tripled. Right, the cost of 5.56 or 2.23 ammunition has moved from 20 cents a round to 30 cents a round. It's gotten ridiculous at points. I think most people would admit, and so the big question everyone has is why? Why has it gone up so much? And I think that your explanation that part of the reason is consolidation, and that these larger companies have an incentive, at the very least, to not want to increase supply too much in a market like that. It makes sense. And the traditional answer that higher prices will lead to more people entering the market and prices coming back down due to competition, it doesn't work as well, perhaps, in this market, given a number of factors, including the high barrier of entry in terms of costs and construction of factories, and then dealing with regulated explosive material, essentially, in production of ammunition. So, I think there's some fair points in here for sure. Can you just talk a little bit more about that aspect of it, how this high barrier of entry makes this particular market less responsive to high pricing increases?
Yeah, I mean, barriers to entry, it's a very, we're in kind of the midst of a revolution in antitrust thinking because of the consolidation that we've seen for 25 years or 40 years, actually. There was this perception from economists, just really starting in the early 80s, that high prices will lead to entry, which will compete down the prices. And you don't want to intervene in markets because, high prices can be, or just dominant firms are often a result of just firms being better than other firms. Like the biggest firm is the biggest because it's the best, right? And, if they have what are called supernatural profits, then the best way to break their monopoly is to have somebody come into the market, take some of their margin, right? That's the traditional model for how to see the problem. And what economists have sort of figured out, not economists, but economists and other scholars, is that markups in the economy, which is to say kind of profit margins and in particular, have gone up and they've stayed up, right? So you're not seeing this kind of entry. And in this particular market, every market is different, right? Every market is its own special snowflake. In some markets like meat and cattle, right? Cattle ranchers are all complaining about the problem because they have the meat packers that are dominant. There's not that many meat packers. They're regional. So if there's one meat plant or meat packing plant near you, that's the only one you can go to. You're a price taker. If that one shuts down, you're kind of screwed. So the meat packers have a lot of power, and they also, if someone tries to set up a competitive meat packing plant, then a grocery store, like the dominant meat packers will sell it. If you buy from the new guy, we won't sell to you, right? So they also have control over distribution, not just the physical production. And I don't know that that's happening in the gun and ammunition industry. I think it probably isn't, because it seems like people will find this stuff, they'll buy it online, there's not that as much of a control of distribution. But still, you have to look at the whole kind of, it looks like you wanted to say something.
Yeah, no, I mean, that was one of my critiques of this general theory here. Not to say that there's no effect from the consolidation, or that's like I was just saying, that I think you made a good case that the fact that two companies dominate the market is probably helping them to modulate supply in order to keep prices higher. I think, and not necessarily just because they want to make more. I mean, obviously every business wants to make more money, but it's also, I think there's as you identify in your piece itself, there's a very real fear in the ammo industry of the crash, right? Of overproducing and then demand drying up and then them having to shut down factories and lay people off. This was something that Hornady, this is another point too that I would bring up is, well, there are a number of significant manufacturers beyond Vista and Olin. Of course, there's Hornady, there's SIG, there's Ammo Inc. There are other producers that they're not the size and scope of Vista or Olin, but there are other players in the market, and they have all increased their own production as well. But anyway, when I spoke to them last year for a piece that I wrote on the shortage and why it's happened and how long it's going to last, which is still ongoing and is likely to last even further. But one of the things that came across is the fear of overproduction and then having to constrict your business on the other end of that. And you see this in the firearms industry all the time because of the cyclical nature of it, because of you get these big surges in demand that come all at once and then cool off fairly quickly. And it's hard to predict. I mean, this is kind of obviously this goes beyond ammo and gun industry into all kinds of.
This is true for most commodity industries in general. Like after World War I, the aluminum. Basically, after a war, everybody has way too much capacity, at least, and so dealing with overcapacity, dealing with these cyclical swings is always tricky. Then I think the other weakness of my argument is that, there's just been a massive increase in demand. There's just a lot more gun owners. And so you could definitely, and I don't think that the shortage and the high prices are just purely a result of consolidation. They're clearly a result of really high demand. But the question is why things haven't normalized and why there isn't a lot more investment. I think is I think that's the kind of core of it.
I think that's much more interesting, which is why I wanted to have you on, because obviously you hear a lot of people notice the lack of supply and the increased prices, and you get a lot of questioning, you get a lot of theories, and a lot of them are just kind of like there isn't much to it. There might be some tiny grain of truth here or there, but it's they exaggerate it to like you hear a lot about, oh, this is because the government's buying up ammunition, and they're doing it on purpose so that we can't buy it, and it's like yes, the government agencies buy a lot of ammunition, even ones you wouldn't expect, because a lot of government agencies have police forces that you wouldn't realize that they do, but like the post office or something, right? But like they do that all the time.
Housing, there's it's kind of weird.
They all have police departments.
Everybody's got a police department. It's like if you're a government agency and you don't have a police department, you're not cool.
Right, and they all buy millions of rounds of ammunition because they have to train their officers and so it's true that government agencies buy up a lot of ammunition. What's not true is that it's likely driving much of any of the, surge in prices or lack of supply. That because they do this, they're buying ammunition all the time.
Well, the other thing is that the government actually owns They own ammunition plants that are operated by Olin. One of their biggest production facilities is actually a government-owned plant. And one of the reasons we had a consolidation is because after the Cold War, the military just shut down a bunch of its ammunition plants, right? So that's another part of the dynamic.
Yeah, and you've seen that with gun makers too. I mean, there's what Rock Island Armory was an old armory, but now is a private company operating out of the Philippines to make firearms. But and Springfield and so forth.
By the way, that's an easy way to take capacity off the market and. Is if the government, one of the ways that we managed swings in aluminum prices after World War II is the government just bought big stocks of aluminum when the prices were low and sold them back into the market. We have strategic petroleum reserves. There's no reason why you couldn't do this with, since government's buying a ton of ammo anyway, right? I mean, or there's no reason you couldn't have the government manage the swing.
Strategic ammo reserve. Yeah.
I mean, you need it, right? I mean,
not a bad idea. But my point with that is just that I wanted to have you on because I thought reading through your piece that you you weren't trying to push this to be the only explanation for what's going on. It's just a part of what's happening.
Yeah.
And I think that's reasonable to say, like how big of a part is a more interesting question.
One possibility here that I think, so this is really about like the industry is cyclical. We all know that what's happening here is the demand is driving it. But the question is kind of like how much of how much of the pro-cyclicality is being driven by demand and how much is being driven by the kind of ossified industry structure, which is a function of consolidation. And I don't have an answer to that. I think a significant amount of the like lack of investment is coming from that. And I'll just give you a Supreme Court case that caused this problem. So a couple of years ago, there was a Weyerhaeuser, which is a lumber. They process logs into lumber, right? And one of the things that they were doing is they were pricing their product when they had a competitor that was smaller that was trying to come to the market. They would price their product lower than that competitor, or they would bid up the raw materials, like overpay for the raw materials, particularly the logs, so that their competitor couldn't get access to those logs. And the idea was to destroy the ability of new firms to have capacity in the market. That's called predatory pricing or predatory bidding, depending on what side of the market you're doing it on. If you're overpaying, it's predatory bidding. If you're underpricing, it's predatory pricing. But it's the same dynamic. So Weyerhaeuser was doing this, and they caused their competitors to go out of business. And it went to the courts, and their competitor said, this is an antitrust violation. You're trying to monopolize the market because after we go out of business, you're going to raise prices or you're going to lower the amount that you're paying for logs. And so it went all the way up to the Supreme Court, and the Supreme Court said, well, no, since you're reducing prices on the consumer side or you're raising prices to pay to suppliers, even though you're doing it to monopolize the market, it's legal because all we care about is price. We don't care about whether you're acquiring market power. That's not really a thing. And so that effectively legalized a form of predatory pricing, and particularly predatory bidding, right? Which has really significant impacts in high capital cost industries, because I'm not going to build a factory to, like, if I'm saying, okay, I want to compete with Vista, I'm going to build a big factory. Vista, like, let's say there is a crash, right? We know this is a cyclical industry. Then how do we know that Vista isn't going to intentionally underprice to try to drive like the firm out of the market? I mean, it's legal for them to do it, right? Because the Supreme Court legalized it versus not being able to do that. Like, if the incentive model for investing in more capacity across the economy changed once that Weyerhaeuser decision came out. And so why wouldn't, like the same thing is true with merger law, right? The purchase acquisition of Remington, they bought it out of bankruptcy, but like Remington got ruined by a private equity firm. Like, it was sort of destroyed there. And so that's another trend across the economy, where you have the acquisition of firms by private equity who don't really care about the operational details. They will often ruin the firm. And then that firm will kind of be an empty husk, which will be acquired by a conglomerate in the industry. And that's a problem of enabling kind of these financiers to engage in that kind of predatory behavior, and then not enforcing merger laws. So then that allows industries to get consolidated. So there's plus this predatory pricing, predatory bidding, the legalization of that. So you have kind of like a whole series of factors. And what you're dealing with, and this I'm actually curious, because you know a lot more about this than I do. But what I was told is that it's particularly the primers are the problem. Like, they're the kind of the key bottleneck. You have like issues with staff and brass and other raw materials, but it's really the primers that are the bottleneck in terms of getting more ammo. And I think like what's likely happening is that you see brittleness. We've never had a problem like this in America, where we just didn't have supply for this long in the ammunition market at a period of peacetime. And so I think we have to like recognize that there is, granted that like COVID, this situation is we've never had a situation like this, but I think we shouldn't be in this situation. We know how to make ammo. We've known how to make ammo for hundreds of years. So something is different.